broke the monthly. Okay, my trend line, it respected. However, look at the EMAs. If you don't know what EMAs are, simple terms. EMAs address strength. They are just strength indicators of support and resistance, okay? That is all they do. So when they cross and they push price down, the wider the gap is between your EMAs, right, is the more it tells you the strength behind this movement, basically, or how strong this resistance on top of it is. So when I saw this, right, price basically came back up, retested this zone, because this monthly is not just a line, it's more of a zone, and respected it. What did price do after? It did the concept of filling this wick right here. It filled it. Look, it came down and filled it. All right. If I go to a higher time frame, this wick is not even, this candle is not even here. Let's check this out. 4 hour time frame. Boom. Candle filled it. All right. Then what it did again, it went down, respected my next 4 hour floor, and pulled back. But guys, price is still traveling 200 miles per hour south. Who tell you this is going to stop? It already broke the monthly, right? It broke my trend line, and the EMAs are strong behind it. Very, very, very strong, right? So that's numerous confirmations I have right now, right? So what do I expect price to do? I don't care how negative I am. If I got in here and price pulled back, I know price is about to go again. It has to go because the momentum is pushing it, right, guys? Momentum is pushing this pair, right? So this is why I told everyone not to go long on this pair. Do not buy, because no form of bulls in the market could go against this momentum, all right? Not even the trend, all right? When you see when news comes out and momentum is built up behind a pair, it doesn't respect trend lines, it doesn't respect floors, it doesn't respect anything. It's going to push until that momentum runs out, all right? So that's exactly what it did, right? Now, here's the problem that a lot of people have. They get out too early because they don't have their levels on their charts drawn, right? They don't know where price is going to go. So they pull out up here or here or here, or they get scared and they pull out here. Well, if you pull out up here, you know, let's say you got scared, you just missed 100 more, well, 96 more pips, right? And price is going to go low, I believe, okay? There's a lot of resistance right here around this area, but I believe price will get back down there again, right? There's no stopping this thing, right? And this is why I believe price is going to get lower, because below this, here's my next daily support. So what do you think price is going to do? It's going to make its way down here eventually. It is going to make its way down here. It might do some consecutives here, and then it's going to, you know, retrace, and then it's going to go down and do whatever it needs to do. But eventually, this is where I'm looking for price to go, to the next daily support. All right. So a lot of people, the problem that they have is that they don't look at high time frames. They stay on the low time frames. All right. They live where you can't tell what is happening to price, right? Because let me show you what happens in a low time frame. All right. The lower you go on a time frame, the more busy price gets. Right? So someone will want to watch this and be like, oh my gosh, it's starting to buy now. No, it just went to retest, sold, retest, and now it's going to sell back down again. All right? Let's talk about people who's on the 30-minute time frames. Look how much drama. It's like an action movie going on down here. Your heart and your emotions cannot sustain this, guys. Cannot. Don't even talk about people who live on the 15-minute time frame. Oh my gosh. I mean, this is a video game at this point. You know, you might as well be playing Call of Duty or something, right? Because this right? And let me reset the chart. Look at all of this. Look at all of this. It's just crazy. You'd be like, oh, price is selling. Oh my gosh, it's buying, it's buying, it's buying. Now it's selling, yes. No gosh, it's buying, it's buying. Now it's selling. You would be so emotional. And emotions are the worst trading partners, right? So stay on the higher time frames. It's okay. Because 2-hour charts, right, give you a lot of confirmation on why. Another reason why I know this is going to go down. Look at the EMAs. Look how wide this gap is. Okay, these EMAs are just going to push this all the way south. All the way south. Also, what is below here, guys? What is below this daily support and all? Check this out. Let's go back on the day chart. Look at that. Here's my weekly trend line. Price has the potential to come all the way down to my weekly trend line if it wants to, and then go back up. Or it could, it could test this, retrace, and then go down to the weekly. Guys, this is not going to stop. All right, this is not going to stop. All right. So what I'm here to just teach y'all is the concept of filling the wick and momentum. Very, very important. Anytime news comes out, price will fill the wick at least 2 times consecutively. That means it will and needs to retrace, right? If you're running Fibonacci, right? Or maybe from here, right about there, right? Price would pull back a little bit. It cannot retrace the full amount because of the momentum behind it, right? And then it will go fill the wick again, pull back a little bit, and then fill the wick again. Sometimes it will fill the wick, I don't know, 10 times in a row. But minimum 2 to 3 times, price will always fill the wick. Always fill the wick, right? That's one thing you could bet on. This is why you could hold on to trades, even though it might be, I don't know, $500 profit here, and then it goes back to $50 profit. Hold on, don't worry. Don't take that 50. Wait, it's going to go down to your 500, and then 1,000, and then 1,500, etc., right? So this is, look at this. This is selling. This is still going. It is still, I just took out some profit at the end of the day. All right, guys, this is going. Even if you look at the small time frames, look at that gap between the EMAs. EMAs are keeping price down. The resistance of the ceiling is on top of price. All right. So understand the concept of momentum. All right, and you will know what to do during a news event. All right, and most importantly, you need to always document what is happening during news, because next month when price comes around again, I'm gonna know exactly. I mean, when news comes around again, I'm gonna know exactly what happened. I'm gonna document this all to detail, and I'll know exactly how to trade this even better. Okay. All right. So what I advise everyone to do, always check your calendar, right? Document what happened during a news event like I do, right? And then analyze the charts so you could make informed decisions in the future based on news events and forecasts that are about to happen. All right, guys? This is my short video on macroeconomics, and basically where fundamentals meet technical analysis on your charts, right? If you don't know how to draw up all your levels, we're going to do a Zoom call on that possibly this weekend. But just make sure you understand the concept of momentum. All right, guys? So this is what I mean by filling the wick, and everyone have a blessed day.